There's such a fine line, making money and losing money in the market.
We want to teach you the concepts.
You have to be okay with the type of trader that you are.
We want to teach you the processes.
This is what really gives the meat and potatoes to it.
We're going to teach you how to.
The bottom line is you want to make money trading.
I can promise you that I can make you a better trader.
Join T3 Live at the Boca Raton Hotel and Resort April 26th and 27th for an exclusive trading education event. Sign up now.
Futures are up this morning as Japan rallies another 2+% and the European Central Bank leaves rates unchanged. Will North Korea's aggressive tone take the market from rally under pressure into correction mode? I'm Brittany Umar and the morning call starts right now.
Good morning. My name is Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So futures are higher this morning after yesterday's sell-off. The S&P posted its biggest daily drop in over a month, and now everyone's wondering what yesterday's action will lead to.
Well, as a trader, I just see frustration everywhere.
Right.
You had the faulty action in the last week or two to lead up to yesterday. And typically, I know a trader going home last night, probably I would say a high percentage of the traders out there might have gone home short, because you had your first down day in the S&P, traders look for follow through. So in their mind, like, okay, tomorrow we open up down, cover some shorts, look for an oversold bounce. So then they walk in today and like, oh, okay, I'm short, here's a big bounce. Can I short that bounce? Or, will it just be a gap and go to the upside all day? So now people who are looking for some type of, buy the oversold bounce, like, oh, they're taking away that trade, and then those who are short are coming in with a little bit of pain saying, oh, I hope they don't just take me to the cleaners today like they did with the guys doing that in the Nikkei, over there in Japan, because that market opened up down, 1.5%, and then closing the highs, taking every short out there for the cleaners. So I think people on the trader side are like, okay, I want to short this up opening, but I want to do it with a plan.
Right, so what do you tell traders who want to short this up move?
Let's say you measure out two areas of resistance, levels that the bears shouldn't let the bulls reclaim in order to keep some pressure on. So if we take a quick look at the chart of the S&P, you will see that, we talk about a lot of different trends. And here's that macro trend that started in November, and this one hasn't been tested for the entire year. Okay, then you talk about this intermediate trend that did get tested within the Italian election volatility. And then, so far right here, it didn't even get to it yet. And then you talk about this cute accelerated trend. This is where I like to live. I like to have portfolio approach, a lot of positions going as long as it follows this one. Then right when this broke, this is when we get active. Okay, and this one led to about a 45 handle move to the downside, but before holding, then it went, it held in there, continued. You had a small little accelerated trend here that broke to the downside, but didn't amount to much. And then here's another accelerated trend that broke to the downside. So I was talking to you guys about, this recent breakout from last week, which was about 1458 to 1462. I think if the bears want to contain this move, and if they want to have the potential of lower prices, this is your area to reshort. This is about 1560 to 1564. If we were to close back above this trend line, I think you have a lot of shorts trapped, and it might have been just a day in the life, and then we can continue, and you better just not be a stubborn short.
Well, maybe there are areas that we can look to today for clues about where the market will head. Areas like the transports. We've been focusing on the transports and the Russell all week since their down move on Monday. So will you be paying attention to them today?
Yes, and this was an area that I was going to be looking for some type of oversold bounce if we open down for the fourth day. We all have rules, and I like to follow mine. Typically, one, I don't buy on the first engulfing down day. And typically after 3 down days, I figure it's always a good spot to cover some shorts. So if you look here at the transports, you will see right here, look at this pattern that was in place, and look at Monday. Look at this engulfing bar. Okay, that's an engulfing bar, engulfed the last few days here. So that's why I say I don't buy the transports on the first down day in the red. You actually look to short that, and then look what happened thereafter. Boom, boom. Okay, so 3 down days in the transports right into a longer term trend line. So this right here is pretty big support. So if you want to play a bounce, you played off this. I was hoping we would get some kind of lower open to buy it easier. And then if you're looking to re-short and see if the bears have control, here is your level. If the bears don't want this to just regroup like it did here, engulf it and continue, they do not let the transports close back above, I would say, 109 to 110. And if you did cover your shorts into the third down day and you follow my rule, perhaps you can reshort the rally into this area for then what could be further downside. So I think this is the line in the sand. Here's your somewhat easier bounce play if you're looking for that, and then this is your area to reshort if it gets there.
Now, how does that compare to the Russell, which we've also been highlighting as it too has continued to fall, and this has breached its 50-day after a 3-day sell-off as well?
Same thing. I know on Monday everyone's like, Red Dog, why aren't you buying a dip? You've been talking about buying a dip and how healthy it is. I'm like, well, at these areas after an engulfing day, you don't look to buy the day or the first day. So anyway, this one too followed the same suit as the transports. You look here at the chart, you will see that this one had a really big trend line coming all the way up. This was Monday's engulfing action. So it took out this entire range. So to me, that wasn't a buy. That was a get out of the way if you've been riding this rally. And then what happened? Boom, boom. Okay, nice short targeted tactics if that was you. Broke through the 50-day, so now the question is, can I get back above the 50-day? Same thing goes here. If you covered into this third down day, perhaps you could look to reshort if it does not get back above 93. If you're looking for a bounce, trade versus level here, maybe they try and take these things negative quickly and then you get some kind of Red Dog reversal around this pivot. So write down yesterday's low in all your things and then just look to see where resistance 1 is and then resistance 2. And then you also have the 50-day, which is a spot. So, if they don't want the Russell to continue higher and they want to keep control, the bears don't let the bulls take back 93. It might not be today, it might be tomorrow into the jobs number, but these are the levels that everyone should be writing down, like your don't pass lines in both directions.
All right, well, while we're at it, let's check the temperature of all the sectors. The home builders were weak yesterday. The XHB saw a big loss of almost 3%, fell below its 50-day, possibly tied to the fact that the ADP report showed that no construction jobs were added in March.
Yes, and this one has been relatively weaker, and this is already at one of those long-term trends. So this one not only broke the accelerated trend line, it's already testing the gradual one, which is more important to longer-term guys. So if you look here at the XHB, you will see, you draw this trend that I put in here from this low, it's been tracking it and holding it, and here is your one accelerated trend line that if you shorted, you made some money, but it held here, and then here is your next accelerated trend line, looked very similar to this, and what did it do? It came in and tested this longer term trend line. So hopefully if you did get short here, you covered a little bit on this trend line, and I don't know if you took things home long last night saying I'm gonna close my eyes and do it, I think it was a bit of a risk considering that S&P had its first down day, but anyway, if you did, congratulations, you're getting paid. I would say the same thing goes here, 29, 29.50. If the bulls have any control, the bears, they won't let this be reclaimed. Because look what happened here. You had boom, a move to the downside, quickly bounced off it, held higher. If the bears had control this time, they would not have let this line have been breached. But you know what? If it went through it and you were shorted and you covered here, you saved yourself a lot of pain to new highs. So now look at the same thing from a higher level to see if the pattern repeats itself or changes. That's what I'm looking to see. Do patterns repeat themselves where we just contain the downside and continue up, or do we show more weakness and continue to correct more?
Right. Okay. Well, checking in on the retailers then, they had been holding up well, but even they had to give up 1.4% yesterday and broke below its 8-day.
Yes, and if you look at this is only the first down day. So there is relative strength in retail. And if you look here, broke the 8-day one day, it's probably opening up. If you're looking for relative strength, there is relative strength in retail. You've seen relative strength in Walmart, in Nike, some in Target, blah, blah, blah. P.S. Question is, do the stronger sectors play catch up to the downside to the weaker ones, or do they pull up the weaker ones? And that's just another divergence we're going to be playing with.
And over in precious metals, gold, selling pressure picked up in gold at once again, and it seems like there's just weakness there no matter what.
Right? If the market goes up, it goes down. The market goes down, it goes down. And everyone's trying to make excuses on why it shouldn't be going down, but it is. So price action, is always king here. And, you have a few different time frames of work going on. And now I think it's the first time that the macro metal owners need to wake up and either stop bugging out and make some changes. Because if you look here at the trends, this was the peak that happened in October. Okay, remember this move to the downside, all of a sudden found support. You had this intermediate trend. So, everyone's like, well, I'm a macro investor in gold. I'm like, okay, well, I trade intermediate trends. So anyway, this 161 could have been a really nice stop out for you if you were looking to be there, or maybe even a short. So then what happened? It quickly to the downside. And then what did it do? It held macro support. First time you get to macro support from a huge area, typically you hold it. Then what happened? You had a bounce, that failed, and then yesterday closed below the March 2nd lows, which was another sell signal. Plus, we talk about gaps. Look at this gap to the downside in gold that didn't get filled, so that could have been your way out. So anyway, here it is, a little bit off the lows. It's opening lower. You got to go to your weekly chart now and take a look here, because this is key, guys. I know that everyone said, oh, I own gold for a decade, I don't care what it does. Bottom line is, it's had a really big move. It's coming back to support again. You've been here once, 2, 3. It looks like it's going to break it. This breaks it and closes below it. You could see it move down to at least a 200-day, which comes in around 140. So if I were you, I would protect some gains, and they're probably looking for, definitely some people out there looking to make some money short here. So anyway, this is your macro line in the sand. This was your intermediate line in the sand, and now here is bigger support if it closes below.
All right, and the financials had a bad day again. The XLF fell all the way to its 50-day and closed at lows. So should this be on our radar for more selling today?
Well, this one, gave up its 821 and now it's near the 50. Goldman's been leading the way. We've been talking about that, so it's been giving us clues for guys to either be short or be a little less long. And if you look here at the XLF, you will see that after a move lower and then trying to consolidate, it finally had a wide range bar to the downside to take out support. So at this point, here is yesterday's low at the 50. Maybe it tries to rally back up and test this. Maybe it does it today. But 1810 is big. If the bears want to contain control here in the financials, they don't let it reclaim 1810. It hovers below, then continues. Here, when you had that big wide range bar, what happened? You had a red dog reversal, powered through, held higher, and then continued. So we'll see what happens here. So this is your line in the sand if you want to re-short a bounce. If it gets above that and holds above that, then it could have been a one-day wonder, or at least the continuation to what was a little choppy, lethargic, weaker action.
And coming up, we're going to go in the trenches with high beta tech, but first a quick commercial break. Stay with us.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our 2 very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back and going in the trenches with high beta tech, where a lot of names are just out of play right now, starting with Apple, which is still in the danger zone, managed to notch a tiny gain yesterday, but still feels pretty heavy.
Yes, we did catch a few bounces along the way during this downtrend, but overall the stock's still broken, the macro chart's still broken, and every time we've tried to buy, or get long and judge it after a bit of a move, it fails. So if you look at the chart real quickly of Apple, you will see that here was that head and shoulders top pattern. Here's when it broke the 21-day, and then here's when it broke a trend line we've been talking about, and then ever since it's had a big descending trend line to the downside. Yes, we caught a few different rallies here. This was a nice rally, okay? Went all the way up to the trend line and then failed right there. That was your way out. Then it went lower. This was the 2013 igniting bar. Rallied up, talked about if it would hold this gap, maybe it would change. It didn't. Now PS down here, the last tradable move we had was when it broke this little triangle right around 445. Then remember we added to it, what was the high there? That was 438. When it broke this descending channel here. And then remember it took out the 50-day? And we talked about, does it continue to create a new uptrend? Can it hold the 50-day? It didn't. So that was your stop, that was your way out. Some people actually got short there. I didn't. And then here's your move lower. So now if you want to take a closer look to what's going on here, right now you do have a little bit of a higher low. The bulls will say, okay, look, we put a low in a 426 versus 419. Okay. The bears will say, look, we just worked off this big move from 470 down to here. So at this point, this is your lower area to trade against. If it were to get above just say, what is this now? This high here of yesterday's 438's been containing this move. So if it gets above this and holds above it for maybe 30 to 60 minutes, perhaps you get another move. But look at all these moving averages in front of it. That's going to be resistance. So I would say only day trade this thing for now until we get closer to earnings. Above 438, maybe you get a move back to about 443 to 450. If it goes negative today and starts taking out 426, then you got to look at 419, because if it breaks 419, you could have another macro move lower.
Could we expect this to be extra choppy today ahead of the Facebook Android event?
Could be a little bit, because phones are where Apple lives, and if this is an exciting new phone, maybe it will get some weakness. But if it's a flop and people don't like what they see with Facebook, maybe that helps Apple a little bit. But I don't think they've been as correlated together as much as people have been saying. Buy Google, sell Apple, and then when Apple's going up, buy Apple, sell Google. But
right.
I would just watch the price action independently.
All right. Well, Netflix and LinkedIn were two names that we talked about a lot following their big post-earnings moves when they both ran out of steam, and they both dropped significantly yesterday.
Yeah, this upper range has been very choppy. Every time I tried to break out and get momentum, traders that tried it, if they didn't sell correctly, they're like, oh, they just get back all their gains. If they tried buying a dip, they almost got hit in the head. So with that said, with Netflix, you'll see here, this was, your earnings gap. Here was your first flag, continued higher. This was your first potent bar that gave a little bit of a correction. And then remember this, it tried to break out and didn't. Here it tried to break out and failed. And then all of a sudden from there, once it broke this upper flag, boom, to the downside through the 50-day. And I guess now, you could say there is some decent support over here. So I would say use this as a point of reference, 164.26. Perhaps on a tactical level, you could see a little bit of a bounce back to 177 to 181. But then, I think there's just going to be a ton of resistance coming into here. So right now, it is a bit broken. Most momentum guys are probably stopped out of it. And, it is about 30 points or more off of where it was last week. So can we see a little bit of a bounce? Yes, but I just wouldn't do it with any size. And I think you mentioned LinkedIn. LinkedIn, I messed up this trade. I was trying to be short it 2 days ago, and I didn't stay with it. I was looking at the same type of scenario up here where here is your topping, tail or outside day. Here, when it tried to break out, got negated. Here was your lower high, engulfing. And then on this inside day, it couldn't break below the 21-day, so I got away from it. And then, boom, yesterday it broke below it. So I would think there's a good chance that this reaches the 50-day. So I wouldn't be in such a rush to buy it. But I would also say watch the price action, because it is a strong stock. Below 165, you get your 157, 45. We did have this on the price point sheet as a short yesterday. I think some guys made some money with it. Just goes to show you can make money from the long side and from the short side. But I think overall, the more money would be made if you're able to buy this dip down here at 157.
Well, speaking of Google, as you mentioned it before, it sold off yesterday and is back below its 8 and 21 day. So what are levels we should be paying attention to today?
This one it's trying to build an upper level base. It's definitely one of the better high beta names for now. But it trickled down from 844, found a 2-day bounce, and I would say at this point, if you're a Google fan, you're going to have to deal with earnings coming up soon. It's still above the 50-day. It was a nice trade since the last earnings. At this particular point, I would say the longer it stays above the 50-day, the higher the percentage finally maybe takes out this 819. And we talked about after this 2-day move that 819 could be a problem. And maybe the market was more of a problem than 819, but we'll figure that out. If it could hold, I guess, the upper area of this lower range, maybe it'll have a little bit more power to finally get above this and continue if the market wants to let things continue and we contain the downside.
And finally, Amazon also took a hit yesterday, closing down 1.6%, which brought it all the way down to retest its 100-day. So can it find support here?
It's just a choppy mess. It's such a, when it looks the worst, you buy it. When it looks the best, you sell it. At this point, let's just talk about it when it gets closer to earnings.
All right, time for some quick hits here. Of course, we have the big Facebook phone event today. It did get a nice push yesterday. Would you expect continuation to the upside today?
We shall see. I am long it. I tried being long it 2 days ago. It didn't work. Yesterday it had some nice relative strength. Maybe they're just trying to run it into the event so they could sell it. I don't know. We'll see what happens with their phone. It's at 1 o'clock. I thought yesterday, remember we were talking about it, that maybe being able to disseminate news from social mediums could add revenue besides the whole gift thing, besides maybe a new phone. So who knows, maybe they could finally monetize their user base. So anyway, you look at the macro chart here, it's still working its way through. You still have this long-term cup and handle type pattern. The bears will say that this is, a head and shoulders top right here with the left shoulder, the head, this being the right shoulder, this being your neckline. The bulls will say, you had a really nice move from the lows. It retraced a decent amount, maybe more than they wanted to. It held support. If you could break this downtrend, it can continue. So for me, I'm trying to be a little bit more glass half full. I bought some. I like the fact that it got above this. If there wasn't an event, I'd like it more because the sellers wouldn't just try and sell an event like they did over here. So anyway, if it could stay above this trend line, above 26.50, I'll stay with it. If it all of a sudden starts to break below, and especially breaks below 25.75, just another bad trade.
All right, and on Tuesday, we talked about a potential short setup in Whole Foods. Yesterday, it broke a key support level on its way down. So is there more downside in store today?
We shall see. This has been a broken stock, and we talked on Tuesday, I believe, about stocks you could be long, stocks you could be short, and yesterday I think guys got paid by being able to be short Whole Foods, Morgan, even Goldman. You look at Whole Foods right here. Breaking below support. It is near a macro support line. So I would say just trim and trail it and do it how you want. This was a nice trade here when it broke this area. Now the question is, what does it do at this lower level? I would always take trades along the way, but technically WFM looks broken. And you mentioned Morgan Stanley. The stock lost another 2.7% yesterday. So what should we be watching today? Same thing. We talked about it. It was the first financial back at the gap that started in 2013. So if you're looking to short a financial, more alpha there. You look at Morgan Stanley. Guys were saying thank you yesterday. Charcoal did a great job isolating this one. Here it is, broke below, got a little follow through, filled the gap. So now it's just like trim and trail. Does it go down to the 200-day? If the financials have more weakness, chances are this will see it. It's below every one of its moving averages. If it tries to rally back up, and see how it handles this zone. If it can't get back above it, then maybe it goes lower. But for right now, pretty big move from 24 down to here. So I would have covered some, but if you didn't cover it all, wait to see what happens if it could still stay below this broken trend line. And Boeing met some buyers early yesterday, but closed off its highs. It did have 3 down days in a row before that. So does it just need some time? I would just give this time. We talked about the move from 77 to 85. That was in the 2013 predictions, and it happened. So you always want to sell someone that happens. And granted, it went a little bit above it. It's trying to hold higher. At this point, I just still think it needs time. It's letting the 21-day catch up. This is a heck of a move. You never know how long it's going to take to absorb that. So for right now, if you're trading it short term, perhaps trade it versus 21-day. But it's going to take some time to build a very big channel before it even attempts to go again. So I would just be a little light here. And if you were trading it from a micro standpoint, this probably would have been a spot to get yourself stopped out. And now if you were looking to trade a level versus a level, there's your 21-day. So as you head into trading today, is flexibility the name of the game? Yeah, it's the right thing to do after a break like we saw yesterday in the spiders is to try and short a bounce. The question is, if it is a gap and go into the jobs number tomorrow, that bounce might go higher than people want and could take shorts out on stretchers if they get too big too fast. So with that said, I would say that try and do that, but just don't do it with too much size and know your time frame. Hopefully you didn't go out, leverage short as much as you can, tier 3 into the close yesterday, because we still are in a strong market and strong trends. And this little faulty action doesn't mean, markets are going to get crushed. So you might have acted a little bit too quick. So I would say have a line in the sand and value it and honor it, because if we start getting back above 1562 when we hold above it, you're going to have to think, all right, do I take these shorts into tomorrow's jobs number where, who knows what happens there? You could really get taken out of the stretcher. Or do you say, okay, I tried to do it, just a bad type of spot for the market, let me move on. And if you, bought some stocks yesterday for an oversold bounce, just know where you might want to trim some into some resistance, because maybe it is just a bounce. So at this point, I just think nobody truly knows what the next move is. Yesterday was definitely one of those days, or the last few sessions, to get a little bit more neutral, have some shorts, have some longs, and now at this point we just want to see what type of action we have moving forward, because we were up 10% in the first quarter. I don't think anyone was expecting the same thing in the second quarter, so it made sense just to pull it back just for that. Right. All right. And with that said, happy trading, everyone, and have a great day.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.